Okay, this is a final update for the week. The Forex market's officially closed. It is February 9th, 2018. And again, market's closed for trading this week. This is the pound dollar. So if you're keeping along with the trade alerts that we called, this was a trade that I talked about earlier this morning when we were in the trade. It hit the first target and then slid right down to that second target there at 37.65. So we talked about in situations like this, when I'm not too sure how far it's going to go, it's a good idea to lock in profits. Generally, we can trade it to that 65 pip, the 55 pip take profit level when we're trading the breakouts on the pound dollar. These are price levels that I had in the previous video where we got into the trades, but the reason that we're more cautious in a position like this, in case you missed the first video, and you should probably go back and watch that, is that when we see multiple continuation breakout trades in the same direction, let's say a downtrend for a while, a couple of days, maybe a week, whatever the case is, eventually it's going to hit a support level. And when it does that, it's possible that you could see a good solid continuation breakout trade. All the indicators would confirm, but then it doesn't hit the 55 pip take profit level. And the reason you sort of after the fact, it could turn around and go back up and you get stopped out and you think, why didn't that work? It's supposed to work like 95% of the time, Joseph says. And it's true. You've got to be able to identify the right continuation breakout trade. And you got to ask yourself when you see one, are there any prior continuation breakout trades or prior trades, according to my trading system, that are still open? So in other words, have they already fulfilled their targets, their price levels? If so, how many continuation breakout trades have been in place? So we need to be aware of the overall environment, right? How long has this trend been in place? Is it likely that we're going to run into a support level? Because very often what will happen, especially in the heat of the moment, inexperienced traders will just take a look at the 1 hour time frame or whatever time frame they're trading, and they don't stop to take a look at the 4 hour or the daily chart to see if price is running into major support in this case. So that's why we were a lot more cautious here at this point, but it did ultimately run right into that 37.65. I mentioned that in the first video when we talked about this initial setup this morning after it broke out to the downside, and 65 is exactly where this stopped. The low was 1.3765. That's exactly the low that it made, which was approximately 55 pips from the entry. That was my target from the first video. So you can see all that's in place. So it's not like I'm moving these price levels around just to make it look good. But what I want to talk about, it's not so much that I was able to find the right take profit level. And on the pullback, on the retracement, we have to manage these trades to make sure that they're going to continue to move and that everything technically here is telling us that there's nothing wrong with the trade. In other words, when we saw the breakdown and it hit the first target, when it pulled back up, all it did was retested that support level that it broke out of and then dropped back down again. So we have to be consciously aware of not so much what we want to have happen, but what is actually happening. What's going on here? Is it just a retest? Yeah, it's just a retest. Nothing wrong with it. Wait another candle. The next candle is a strong bearish candle, and then it continues to drop. So everything was okay there. We talked about this. We already reviewed this. If you were in the chat room, that's exactly what we were talking about when it came back up and tested that support level. Happens all the time. Now this looks similar to the Tech 1 trade to the downside. If you remember, and if you traded the Bitcoin dollar trade with me at the beginning of this week, there was a breakout on the Bitcoin dollar, and then it pulled back. But it was to the upside, right? So it was a breakout of resistance, and then it pulled back to the resistance level that it broke out of, and then formed a Tech 1 trade, a bullish Tech 1 trade, and we got into the trade going long on that reversal. This did the exact same thing, just in the opposite direction. It was a breakout, a support, continuation breakout trade. It moved down, pulled back to the support level that it broke out of. So it was the exact opposite, and then formed that Tech 1 trade and then dropped. Perfect second entry opportunity right there. That's exactly what we were talking about in the chat room when this was developing this morning, which was exactly, I kept going back and forth showing the trade earlier in the week on Bitcoin dollar as opposed to this one, and it made perfect sense when you could see the two of them combined, or side by side, not combined, but just side by side. So it was the exact same thing, just opposite. Perfect opportunity. So this one hit that target, and it's not so much that, I'm no genius. It's just the only reason why the continuation breakout trade, why I use that 55 pip take profit level, is that I calculated the 55 pip take profit level based on the entry of the continuation signal candle. The way I determined that, first of all, it was a lot of testing. I was into trades that when I first set up this, when I first developed this technique, I would see the setup, the continuation breakout trade, and then I would be up 30, 40 pips, and I would think, okay, this is great. How much longer can I hold on to the trade? How far when should I lock in profits? How much more can I expect out of it? And I remember one day thinking I wanted 70 pips that day, and it didn't go 70 pips. And the whole thing rolled back against me, and I ended up getting stopped out. So I let a perfectly good winning trade turn into a losing trade. Then I needed to go in and I needed to figure out how far could I expect price to travel after a breakout based on what the reason or what caused this breakout. Let's say it was economic data, very often continuation breakout trades, and the breakouts are as a result of economic data. So how far after that could I expect it to continue to travel? So then I had to go back in and I had to look at, and it was hard back in 2001 and 2002 because there were not a lot of websites that shared this kind of information, but I found a couple of websites that talked about daily average trading ranges, and they weren't showing necessarily the charts, they just had some spreadsheets. I consider the majors the pound dollar, euro dollar, dollar Swiss, dollar yen. So that's the fact that it hit and stopped right at that 65 number that I picked, that target. That was based on my entry, the 55 pip from the 3 pip entry. This is exactly what it does. I mean, occasionally, I don't know what the percentage would be. I would probably say maybe 10% of the time on these continuation breakout trades, it will stop right at the 55 pip take profit target that I select. This is the target. There's no reason at this point for me to expect that it's going to go any further. And if it does, I don't care. Because my trade plan for this technique on this pair for this time frame, take into consideration everything that I see here, heading into a Friday. So remember everything I just said. This pair, this time frame, this technique, it requires a 55 pip take profit target. Sometimes it'll go right past the 55 and keep going another 20, 30 pips. That's okay. And I say that every time it happens when we're trading live in the chat room, when it does hit the 55 pip take profit level, it's possible that it could go further. But if it goes further and you don't lock in profits and then it rolls back and it turns into a losing trade, how are you going to feel? It was your own fault. You knew the plan. You knew where the take profit target was. You knew why we have a 55 pip take profit target. You've got to honor that 55 take profit target. Now, the only time I talk about changing the 55 pip take profit level is if we're in a environment like this where we've got to lock in profits because we're not too sure how much further it's going to go. We've already seen multiple continuation breakout trades and it looks like it's starting to run into some support on the larger time frames. So it could cause a bounce, and there's no reason to let a perfectly good trade with 25, 20 pips or 30 pips in it, available. There's no reason to let it roll back and then get stopped out. So this is one of the ways to protect ourselves, is to trade it to the first 20 pip target. Now, 20 to 25 pips. If everything was perfect, if this was, let's say, the first continuation breakout trade, starting or developing a brand new trend direction, and everything lined up correctly, and it was economic data, everything was there perfectly, then we would trade it just to the 55 pip take profit level and not have to really so much worry about the first target. So again, sometimes it's going to do this where it's going to just hit the 55 pip take profit target, and that's it. It'll stop on the number. Very often I say that these targets aren't an exact number and support and resistance isn't an exact number, but sometimes they are an exact number. How many times have you seen a bounce off of, let's say, support right on the number? It happens. It doesn't happen that much, but it happens. And the rest of the time, you have to have a contingency plan, something that's going to help you determine that things are changing just a little, and you've got to lock in those profits. You've got to protect yourself. So this one hit the final target. The same thing with the pound yen. So on that previous update this morning, when we got into these trades, we traded here with the beast, the pound yen. We call the pound yen the beast. This one had hit the first take profit target, had bounced around a little bit, and then dropped down to that final take profit target here, 149.30. I didn't move these numbers. These are the exact same numbers that you're going to see here. If you go back one video, I think to this morning when we talked about the setup here, with the continuation breakout trade. This one, the structure here on the continuation breakout trade was a little bit different. You'll notice that when it gave me the signal, you'll notice how many candles, this is a 1 hour chart, you'll notice how many candles it took before it pulled back down again this morning and then gave me the entry to the targets. So this was a 150 pip move. Now remember, continuation breakout trades, the take profit is 55 pips on the 4 majors. This is a crosspair. This is a yen crosspair. This is the pound yen. We call it the beast because it can move further and faster than the majors in most cases. And the first, and I talked about this morning, the first take profit level on a continuation breakout trade on the pound yen, which is what we're looking at right now, is 150 pips from the entry to that first target. 150 pips to the first target. The next target is 250 pips. One of the reasons why we were careful and locking in profits here as it was hitting this first target here, which wasn't that far, was, again, you can see me do this on the earlier video this morning. There were some key support levels here, and we wanted to lock in profits before it ran into those levels, just in case it bounced and turned around and went back up the opposite direction in the morning. But everything was fine. Everything was fine with this one. This is how this one trades. I mean, it's a pretty wild pair at times, especially with economic data. You probably know exactly what I'm talking about when you trade it. This is a 4 hour chart, by the way, on the pound yen. I'm just kind of showing you the way the candle patterns looked, because as this one was dropping lower, I was watching the 4 hour chart as well on this one. And it's important to be aware, again, what's going on. I mean, this one could turn around and pull right back up, test the level that it broke out of. It's possible. I don't know that it will. It may not. It may turn around and go right back up again. I don't know until I get confirmation. But this one may return back to the level that it broke out of, the support level, and then print that Tech 1 trade and then drop down to that 250 pip take profit target based on that continuation breakout trade on the 1 hour time frame. Now, the other reason why we got into this trade this morning is we got the 1 hour let me go to it right now. We got the 1 hour continuation signal candle yesterday, and then we got the continuation signal candle on the 4 hour chart today as price was dropping back down and returning to that entry level. So everything was confirming just right here. This one could possibly go lower after a retracement if we see confirmation that it's holding at a key resistance level and then printing the entry to sell it again. I don't have that just yet, so I'm not calling to sell it yet. I'm saying that it could return and go all the way back up, but if it goes back up and holds at a significant support level and then prints a reversal signal candle, then maybe we would consider at that point getting into the trade and shorting it back down again. It's a possibility for next week. I don't have that information just yet. I am not calling a short right now. So I'm saying don't sell it immediately on the open next week until we get confirmation. I do not have confirmation that it's going to drop lower. It could. Everything looks okay at this point for it to be able to do something like that. But I don't have the signal that it's actually going to do that just yet, because at the same time, this thing could print a total reversal and go right back up and take out last week's highs or the week before. These are all just possibilities. So let's just keep an eye on it on the open. Again, we're going to watch to see how it behaves when it returns. If it does, in fact, back up there to resistance, the level that it broke out of, and then we'll be looking at the daily time frames on the weekend update. And we talked about Bitcoin, dollar in the previous update. So that's pretty much it. This was a 150 pip trade. The pound dollar was approximately 55 pip. Now, that doesn't include the spread. I don't take into consideration the spread because everybody's using a different broker and everybody's going to be using and has a different spread. So you can factor all that in. But it's when I'm looking at the targets are 150 pips based on price that I see here in the charts. It's the only way that we can all see the same thing. I've always said this whenever I call out these trades from the very beginning when I started trading and sharing my strategies. Look at the charts. Don't look at the pip spread. Don't look at the number of or the dollar amount and the number of pips that you're getting in your trading platform. Look at the charts. Look at the price levels, because this is what everything is based on. The distance, the daily average trading ranges, all of that is calculated based on price movement here on the charts, not incorporating the pip spread and the dollar amount and all that other stuff. That's something you have to manage on your own.